I'm Mace Kochenderfer. I'm a certified reverse mortgage professional with Colorado Reverse Mortgage. Sometimes phrasing things differently is helpful in people's understanding of an idea or of a concept. Generally, I don't want to read articles in my video series helping you move forward in reverse for fear of coming across as lazy. But I've seen reverse mortgage articles that were poorly written in large national publications, and they've got just significant errors. The following article is a well-written article, and it reinforces many of my other comments. There's a couple errors in it, or things I may not agree with. I'll discuss that at the end. Characterizing reverse mortgages as often misunderstood, author Doug Whiteman of the financial publication MoneyWise aims to answer 5 questions that are for potential borrowers before making a decision about obtaining a reverse mortgage in his article. His article is titled, "Answer These 5 Questions Before You Do a Reverse Mortgage." So Doug writes, reverse mortgages are often misunderstood. They can be a handy tool for retirees looking for cash. With a conventional mortgage, you borrow money to buy a house and make payments that would allow you to build value in your home. With a reverse mortgage, you borrow from the value and you make no payments. You keep title to your home. The bank collects on the loan when you pass away, sell the house, stop living in the home, fail to pay property taxes or homeowner's insurance, or stop taking care of the place. Here are answers to 5 common questions to help determine if a reverse mortgage could work for you. Number 1, why do a reverse mortgage? A reverse mortgage can be a great way to secure extra money to use as you see fit. Most reverse mortgages are federally insured home equity conversion mortgages, HECMs, acronym we call it HECM. Most reverse mortgages are federally insured home equity conversion mortgages that come with no limits on what you may do with your loan payouts. You may use the money to cover living expenses, pay medical bills, complete home projects, or go on vacation. If you have an existing mortgage, you can even use the reverse mortgage to pay it off. Number 2, who's eligible for a reverse mortgage? To take out a reverse mortgage, you must be 62 years old or older and own your home outright or have a low mortgage balance. You must be confident you can afford maintenance on your home and other costs, including insurance and any homeowners association fees. You have to plan on living there full time, as it needs to be your primary residence. If you're absent for longer than 12 months, the bank is allowed to collect on the loan. Number 3, how does a reverse mortgage work? As with conventional mortgages, reverse mortgage loans come with fixed rates or adjustable rates. While a fixed rate reverse mortgage loan is paid in a lump sum, retirees who choose the adjustable rate option have the option of receiving monthly payments, a line of credit, a lump sum, or a combination. As a general rule, the more your house is worth and the older you are, the larger the potential loan. Age for purposes of the loan is based on the age of the younger spouse. For government-backed HECM reverse mortgages, the total loan amount is capped at $726,525 for the year 2019. Number 4, what are the downsides? Many financial advisors will tell you it's better to exhaust all other financial means before applying for a reverse mortgage. Consider cutting down on expenses or liquidating your portfolio before pursuing a reverse mortgage. If you're still in need of additional funds, a reverse mortgage may be the best option. Signing up for a reverse mortgage means you'll essentially be committing to living in the house for the rest of your life. Should you ever want to move, you'll need to pay off the loan. If you fall behind on property taxes or insurance payments, you could find yourself at risk of foreclosure. Number 5, how do I decide? It's always a good idea to get a second opinion. Bring younger family members into the decision making to ensure that all nuances of the agreement are fully understood. If you get cold feet after signing the deal, you have a window of at least 3 days to cancel without penalty. For the right homeowner, a reverse mortgage can be an excellent way to turn a home into liquid funds. All right, so that's the end of his article. A couple things I'd like to comment on, though. He indicates that the total loan amount is capped at $726,525. Here, Doug flubbed up a little bit. The maximum claim amount, or the MCA, not the loan size, is what is capped at the $726,525. The MCA is the maximum home value that's going to be used for the calculation that determine what we call the principal limit, or the loan size. So it's not the maximum loan size of $726,000, but it's the maximum home value that we use in the industry per FHA for the calculation that occurs. He also indicated that many financial advisors will tell you it's better to exhaust all other financial means. Well, many financial advisors doesn't mean all financial advisors. So I will disagree with those financial advisors that will say that it's better to exhaust your other financial resources for a variety of reasons. If you've got to liquidate stocks or 401ks, you may be subject to paying penalties, or you may be subject to paying taxes on these monies. Or another example would be if the stock market is down, it may not be a good time for you to sell. So depending on your situation, it may or may not be a wise idea to liquidate your other resources. And there are other reasons as well, but oftentimes you really don't know what the right decision is until later. As they say, hindsight is 20/20. Let's see. Oh, the last thing, he said that you have a window of at least 3 days to cancel without penalty. This is true with any refinance on a mortgage. There's a 3-day right of rescission period, and you have 3 business days after closing in which to rescind on a loan that is being backed by your property. These are business days, and what indicates a business day? These are days that mail arrives at your house. So Saturdays are typically considered a business day. Federal holidays like Memorial Day, where no mail is being delivered, do not count. So he's correct. You have 3 business days after the loan closing in order to cancel. So again, it's a very good article. There's just a few things in there that I didn't agree with, but overall it was well written, and I appreciate his efforts in putting together a good article. Well, thanks again for watching today. My name is Mace Kochenderfer with Colorado Reverse Mortgage. If you have any questions, I can be reached at 720-828-7788. Thank you very much. Take care.